Hello, everyone. Welcome back to Long Reads Live. Thanks for tuning in. Sorry we're a few minutes late today. We are dealing with the full range of crypto OPSEC, but we're all here. So I'm excited for this conversation. I think so. The whole idea behind Long Reads Live was to get interesting people talking about the conversations that are kind of percolating in crypto. And tonight I've been experimenting a little bit with different formats. And what I found over the last couple of weeks is that the most interesting part of the conversation is always when everyone's together and it can kind of just bounce back and forth. So today we're trying out having everyone join right from the beginning and be all together. And so we're going to talk about a bunch of stuff tonight. We're going to talk about the kind of the thunderous whisper of institutionalization that's been getting louder and louder. We're going to talk about kind of some interesting international intrigue stuff. I know a few of you have cool opinions there, and just see where the conversation takes us. But first, I would love for my guests to introduce ourselves. Maybe Taylor, do you want to start?
Sorry, I lost you. Yeah, my name is Taylor Monahan. I am the founder and CEO of MyCrypto, which is a crypto wallet mainly for Ethereum and Ethereum-based chains. I've been in this space for about 3 or 4 years now, seriously building stuff for about 3 years. And I mostly just hang out and read everything and soak up all the knowledge of the people that are way smarter than me.
Awesome. Lawson, tell us about yourself, man.
Hey, Lawson Baker, Twitter handle LWSN Baker. I am a recovering attorney, prior investment banker. I went to law school to get into investment banking, graduated the second worst year to do that. That was 2010. 2009 was the worst year. Was in investment banking about 4 or 5 years, and then decided I wanted to join a startup and kind of change my route. I joined a company called Synapse Pay, now synapsefi.com, which was like the first banking API provider in the US. And our very first customers in like late 14, early 15 were predominantly cryptocurrency exchanges. Since then, Synapse's customers have all sorts of types of fintechs, but that's how I fell into crypto. Basically, from the very beginning at Synapse, I had one foot in like fintech and the banking world and another foot in like basically the behind the scenes of what's happening at these exchanges, and learned a lot and saw a lot of kind of the underside of crypto. And then so recently left there. Now I'm at TokenSoft, which is a white label platform for security token issuances, and I am head of special projects. And slight disclaimer, everything I say is not a legal opinion, financial opinion, or represents TokenSoft. It's all my thoughts.
Amazing. Cool. Yeah. And Lawson is one of my favorite people on Twitter to see kind of thinking about security tokens in a different way. So I'm excited to get into that conversation. Taylor, you already have we have a MyCrypto shout out in the chat already. So that's cool.
We have the best people in this space and the best supporters. That's all.
Awesome. Yeah, no, listen, the whole idea of software being forkable but community not, I think, is a real thing. So lastly, but definitely not leastly, Mr. Meltzer, welcome to the show.
Yeah, it's rad to be here. I'm a little jet lagged because I just got back from Asia, and I'm actually going back there in a week. So I've decided that it's not even worth trying to adjust the time difference.
Amazing. I would love to hear, for those who don't know you, can you tell us just a little bit about primitive or proof of work, or kind of however you identify yourself these days?
Yeah. So I was in charge of early stage investments at INB, which is China's largest crypto fund with a couple billion under management, kind of depending on the price of Bitcoin that day. And I'm now doing a similar fund, also focused on early stage stuff, called Primitive Ventures with my partner, Devi Wan. And on top of that, I run a newsletter called Proof of Work that one of our fans described as like a weekly stand-up session for the space, which I like as a description. So every week we get 12 to 20 updates from what I think of as the most interesting projects in the space.
That's awesome. No, I think for a lot of us, proof of work is like it's such a nice counterweight to the kind of the normal hype cycle, because it's literally just, you know, what people have done and you know, commits and pushes and all that good stuff. So I think it's kind of like, I think its impact is bigger than even just the 20 or 30 companies that are in there. So it's great to have you, man.
Yeah, I mean, what I like about proof of work is that, like, you know, it's very self-regulating, where like there have been kind of, you know, crappy projects that have tried to get on. What I try to explain to them is, like, you actually don't want that, because like you're not going to be able to fake it for week after week after week. And it's been really cool to see, like, the guys that actually do build, like, every week for 40 weeks they have something really badass to show. So I like it. It's kind of like an unfakeable signal that we take pretty seriously when we're deciding what to invest in.
It's interesting. I mean, I don't actually think I've told you this, but one of the things, you know, so I help a variety of different companies with communications consulting, and a lot of times I'll use it as a reference point, as like people are thinking about like what their schedule is going to be. It's like, well, what would you put on proof of work this week? You know, what do you have going? Like, it's kind of like, rather than kind of designing from what would be ideal from a communication standpoint, we backwards engineer from like, well, what should we be delivering, and then we can figure out how to communicate it.
Yeah, no, a lot of teams have told us that, like, it started out for them sort of as a PR thing, and then it became really useful as like this internal sort of rhythm where they're like, oh, shit, I mean, if we don't have anything to show this week, it's not good.
Awesome. All right, cool, guys. Well, listen, so the idea of this is really just like, I'm interested in smart people's perspectives on different things. And so I wanted to kick off with, I think, like, it's interesting. I don't exactly know how to put it, but I feel like institutionalization as a narrative has been both like the most obvious and omnipresent of this year, but also there's never been kind of like a single moment where everyone's just talking about the herd is coming or whatever, right? Like they're trying to make the hashtag work, but it's kind of like not exactly it. And so I'm interested to see what people think. You know, over the last, I guess, week and a half or whatever, there's been a kind of an uptick in news. So we've got Fidelity announcing Fidelity Digital Assets, which is sort of a custodian and direct buying solution, and obviously is a huge deal based on their size and stature in the market. We've got Goldman Sachs investing in BitGo, kind of another custody solution. And then just today, Bakkt announced that it was going to open Bitcoin futures in December of this year. So I guess, you know, I'm interested in your take, any of you, on either the news from the last couple of weeks, or just like where the institutionalization narrative is in general. And maybe Eric, we'll start with you, just to reverse the order from the intros.
Yeah, I mean, I think so. Crypto is funny because like the space moves really fast and it's incredibly unpredictable in the short term, but in the long term, it's like hyper predictable. And as long as you have like a super long time horizon, it's, in my opinion, not that hard to do well. And so with institutionalization, it's like, well, there's this new asset class. In the beginning, none of them are going to be able to invest in it simply because it's too new and unproven. And then the really adventurous ones are going to invest. And then the not so adventurous ones are going to invest. And then eventually you're going to have, you know, super boring, like when Bitcoin is as boring to discuss as like pork belly futures, then like everyone's going to have a little bit of Bitcoin. And I think we're like kind of on the tail end of the like adventurous people investing. And, you know, now Fidelity's in, and once the custodians get in, then like it's much easier for venture funds and family offices and everyone to invest. And then I think you see this, like, there's this cool cycle that'll happen where, like, you know, right now the reason the SEC is not approving any of these ETFs is not, in my opinion, really because of like the structural issues with the ETFs. It's just that like these markets are so unregulated and so unsurveilled that the SEC has these really big, you know, worries about market manipulation, and that kind of goes away as more institutional money comes in, because like as more of the volume of the market is happening on, you know, Coinbase Pro or on Gemini or on any of these surveilled markets, then like the amount of market share that, say, a BitMEX or, you know, a Bitfinex has goes down, and then the SEC gets more comfortable, and then you have more institutional products. And I think we see that flywheel starting now. And like, it's hard to predict, is this going to happen next month or in 6 months or in a year? But I think in the long term, it's pretty inevitable.
Yeah, either of you guys want to jump in?
Yeah, I think the reason, Nathaniel, that it seems like it's an ongoing discussion is because like a whole bunch of people are just making announcements. I think from a practical standpoint, if you look at least things that fall under like the SEC jurisdiction, I think a lot of people have made an announcements, but very few of those are live. The only things that are live in kind of the institutional and the custodial space really are focused around groups that have like banking or trust law type of approvals, as opposed to like SEC approval. Specifically like on the institutional and like carrying broker dealers and that type of approval. Most of the groups in the space that are planning on trying to do custody in security tokens, from my understanding, actually don't have approval yet. Most of them, if they're like a brand new application and trying to get approval for this new service, new custody of like this crypto security token, the ones that are live tend to be kind of on the trust side. I think it's an ongoing discussion because it's just a whole bunch of press releases and not like a lot of substance. There's not actually like live products out there. I guess is what I'm getting at. Is kind of a little bit of my annoyance and kind of laugh about it. The Fidelity deal, that's awesome, I guess, if that's like something people need. But once again, like they're just signing up people. They're just whitelisting people for a future product in sometime in 2019.
Yeah, I'm on the same page. I am super excited about sort of where this will go eventually, but the reality is that we've seen these sort of narratives play out for a good amount of time now. And I'm going to be most excited when we start seeing actual companies deliver actual anything, right? Literally anything. And, one of the things that excites me most is really the sort of the Fidelity types solving custody for, that type of person. A lot of people ask me, because I build a wallet, do I think that everyone can handle private keys and everyone can maintain custody of their own funds and that's how the future will be? And frankly, no, I don't think that's how the future will be. I think the future is going to be a wide, assortment of products and services. And, I think that things like Fidelity, that's going to be, these custody solutions and these services that are based on the customer experience and providing exceptional support and handholding on like a completely different level than we're used to in the crypto space. Right now, we're sort of really focused on putting the power in people's own hands and letting them maintain their own private keys. But the reality is, when we talk about institutions and big players entering the space, it's a terrifying prospect. And I think Mike from BitGo says it best, because he knows it best, because he's been playing this game for years and years now. He says that, in the sort of like the regular world or the traditional world, everything has like an undo button. Like if you were, if your house completely burns to the ground, you still have backups of things are in the cloud, you have insurance, you probably have, some of your stuff on you, like your wallet and your cell phone. All is not lost. And in the traditional world, we have so many levels and layers of these things that, no matter what bad things happen, there's usually like a solution or an escape route or whatever you want to call it. When we look at crypto, that's one of the most terrifying things. And that's the most terrifying thing for this sort of institutional money as well, is, if you lose this single string of characters, you're screwed, right? Like it's gone. There's no recovering it. And that's not something that most people want to rely on. And so I think that that's what I'm most excited about is when we see people like Fidelity actually building stuff for their user base, we're going to see this space evolve in a lot of remarkable ways.
Yeah, I mean, I think it's useful also to like clarify that the only time the SEC has jurisdiction over Bitcoin is when people do want to do something like, securitize it into an ETF. And so I think when you see people like Fidelity, for example, like they can get by with just the FTC regs, and you'll see products from them a lot faster than you'll see any of the security token stuff. And so I think, there's a pretty strong narrative that it's going to be Bitcoin first for all this stuff, just because, you can move much quicker on that. And the ETF maybe will take a while, but, there's a lot of other stuff that allows institutions to get in even way before an ETF happens.
Yeah, no, I 100% agree. I think from a practical standpoint, like the institutional narrative is like interesting because like it'll be a different class of like users of these tokens and but like in these networks and what they do. But I'm a firm believer that like decentralization like must be protected. And so like with the introduction of centralized providers, we're going to trend away from that in all sorts of ways, like both in like internet infrastructure, in like who's doing the work, who's doing the mining, who's custodying these assets. These are all good things for some users, but potentially negative for net negative for like the ecosystem. And so like,
I think I would push back on that a little bit with that. Like, I don't think it really has much of an effect on me if like someone else uses Bitcoin in a centralized way. And that's kind of like part of what's cool about Bitcoin is that like, you know, you can feel free to store your Bitcoin on a centralized provider, and I can feel free to store mine on, you know, 20 paper wallets distributed globally. And you being centralized doesn't kind of hurt my decentralization.
Agreed. Yeah, I think we have lots of different types of tokens and different discussions for each one. You know, I think from my perspective, like we, as Taylor mentioned, like we have a usability problem, and we need to solve like how do we manage like keys and recovery and time locks and like different things like that. I think as we start to figure those things out, people will also trend towards, you know, solutions that they can do themselves. And then in some scenarios, they're going to want someone else to do it for them because they don't want to make the technical lift or the educational lift they need to do it, or just it's not important to them at that time.
Yeah, no, I totally agree with that.
Yeah, I agree as well. And I definitely feel that sort of feels deep in your heart where you're like, is this really crypto? Like when you're on like Robinhood or you're on one of these things where you can like kind of gain exposure to the markets without actually necessarily holding crypto, or like, do you hold it? You can't move it. You can't withdraw it. You can't really do anything. Is this really crypto? And it's definitely something that I feel as well. And that's why, you know, when we're building, we are dedicated to like fully decentralized and that future and making that future as usable as possible. I just also recognize that, you know, I think that there's such a spectrum of products and such a spectrum of users. And, you know, we're going to be over here building for the decentralized future, and Fidelity is going to do their thing and BitGo is going to do their thing. And, you know, we don't even know what other products are going to be around in the next couple of years. And they're all like, every sort of person in this world is going to have the best product for their specific technical expertise and the amount that they're holding and what they're trying to accomplish. Because the reality is that if you literally just want to gain exposure to the market from a speculative point of view, you know, you don't necessarily need to use MyCrypto to do that. It may be safer to just, you know, use one of these trusted centralized services. Even though that hurts me a lot to say it.
I mean, yeah. I guess I would say like, that shouldn't even hurt you. Like it's totally fine. Like it's, you know, I'm like a hardcore like Bitcoiner, right? And like I think what makes Bitcoin interesting is of course the decentralized aspect. But like if you're a hedge fund, you're a U.S. regulated, SEC regulated hedge fund, the censorship resistance of Bitcoin is not directly relevant to you, right? It's like why the asset has value, but you know, if the SEC comes and tells you shut this down, then like you got to do it anyway. They know who you are. They have complete regulatory authority over you. So it's pretty irrelevant that like it's decentralized at the base layer to you. And I think that's fine. Like let them get exposure however they want. It doesn't hurt me in the slightest.
Well, so this is actually one of the interesting things about I think the Fidelity conversation, and I think Lawson, this might have been going back. Well, I guess it was kind of a point that everyone was making, but the interesting thing is that part of the reason the announcements have felt quiet maybe is to your point that they are just announcements, right? They're not things that are going live and we don't know exactly how they're going to work. I think one of the interesting questions will be how well they've assessed the demand for these products among their, you know, kind of existing users, right? Are all of these new institutional products just going to be competing for existing money in the space, or are they actually on-ramps to new buckets of users? And it feels like that's where the kind of real change could happen, is as these things come online, and if people actually start to, you know, are able to call up their white glove, you know, Fidelity broker or whatever and buy Bitcoin at the same time as they're buying anything else that they buy. So I think it's kind of interesting, and it brings up, we will jump around a little bit, I guess. One of the questions that I think is really interesting, and maybe it builds off of this, so a few weeks ago, USV put out a cool blog post called "The Myth of the Infrastructure Phase," and the thesis is basically that infrastructure and apps don't happen in this kind of linear sequence where, well, we're in an institutional phase now, and at some point we'll be in the application phase. The argument was effectively that there's a cyclical nature to them, where apps basically take advantage of as much infrastructure as they can, and then they really stretch it, and then they get broken because the infrastructure isn't there, which creates the incentives for people to expand and build out the infrastructure further, and so on and so forth, kind of repetitively. And so I think that's interesting to kind of pair that idea with which is the state of dApp usage and crypto usage, I guess, in general. And I'm interested to get your thoughts about whether, I mean, this is obviously hugely reductive, but we're on a talk show effectively, so whatever. Whether the challenge of user adoption is more use case or user experience. Taylor, maybe we start with you. I feel like you think about user experience a lot.
I think about this so much. So there is, by the way, I love this article from USV. I think that it hits on so many key points, and I've read it about 1,000 times now, and I don't know if I like fully grok it or if I've gotten the most out of it. But I think that one thing that they point out that's just really, really important for us to understand is that we can't kind of sit in this environment where we build these protocols, we build these really low level things, and we say, well, if we build this and we build this perfectly, then the world will come and they'll use it and someone will build an app on it and whatever. Like, I don't think that that's a realistic way of approaching this. I think that the applications and the actual use case is what pushes us, and it pushes us to be better, whether you're building infrastructure, whether you're a customer support agent, whether you're just another speculator in the space. When we see these big moves and big things happening, and even if they're like dumb things, so like CryptoKitties last year, that forced us all to be better. It forced us, like, it tested the limits of the network. It tested the limits of us building, of us keeping our infrastructure online, of Infura, of literally everything, right? And the reality is that made everyone across the board better. And it also made us realize, like, hey, maybe we're not quite ready for this. So let's improve this, whether you're literally improving your AWS layer, which is serving this ecosystem, or the ecosystem itself. And that's why in Ethereum, scaling solutions are such a big, topic of conversation right now. So, and then the other thing that I've been thinking a lot about lately is when we were in, 2017 was this huge bull market, this huge hype cycle, this just an overwhelming number of new people were entering this space. And for a variety of reasons, but most of them because of money and greed and all of that great stuff. But as like a side effect, everyone that was building things, like us, for example, they had to grow their teams, they had to grow their product, they had to fix things up, they had to smooth out the rough edges, they had to do all of these things, and they had to do so fast and under pressure. And now, where we're in this sort of bearish market and everything's a lot more under control, and like, for example, our nodes don't go offline because we scaled our nodes to deal with CryptoKitties, and now we're not dealing with CryptoKitties anymore. How do you maintain that sense of urgency, and how do you maintain that sort of making sure you're actually prepared for the next big wave, or whatever, when you're in a more calm environment? And that's something that we're dealing with right now, because a lot of us would just like to kind of take a nap, right? But that's no fun either.
No, I think it's super true, and it's cool to hear lived experience validating that thesis a little bit. Eric, I want to go over to you. Kind of maybe take this from the specific context up a little higher. I feel like you've been pretty vocal about which use cases you feel like are actually real and established, and it's not very many, right? So I don't know. I'd love to hear from you about this question of kind of, what do you think are the established or high potential use cases for, crypto, blockchain, however you want to define it right now, and how does that impact what you're thinking about, maybe from an investment perspective?
Yeah, I mean, so I guess I would say that, like, I have a strong opinion on what right now is a good use case, but I also have an even more strongly held opinion that, like, what that is changes really rapidly. And, like, Primitive and previously at INB, like, we have like no thesis about the space. Like we have no idea where it's going. I think we probably know better than most people where it's going, and we barely know at all. And so it really troubles me, to be honest, when I thought USV would have learned their lesson after the Fat Protocols post, but now they've gone and made another post that's like very specifically about what they think is going on. And I think at the end of the day, like just no one knows. But I think for the moment, like you kind of can see what people are actually doing with crypto. And so like the obvious one is people are using it to store value and to move value around in ways that governments don't approve of. And so you've got a lot of governments around the world, you know, surprisingly, even in some democratic places like South Korea, they have pretty strict capital controls. It turns out like capital really doesn't like being controlled. And so if you have something like Bitcoin, you can avoid those. You can also store value in a way that makes it very difficult for governments to take it away from you. I think we see that as a really strong use case. You know, being in China, we got like sort of a firsthand view of how that works. You know, for anyone who isn't familiar, like China has basically $50,000 is the maximum amount of money you can move out of China in any given year. And there's very few exceptions to that. So you can imagine like anyone that has, you know, ongoing debts overseas, or anyone that's, you know, wants to live in America and pay a mortgage, or, you know, anything as simple as that really has a need for something like Bitcoin. And so I think that use case is so much more mature than almost anything else we see discussed, that like it makes sense that that's kind of the main place that we invest. The two other ones that I see, so I think gaming is going to be huge. I think most of the current sort of attempts like CryptoKitties have not really hit the mark. We are starting to see a lot of like gambling type of stuff happening on EOS, and it's getting user numbers that start to be kind of interesting. So I think there's like on EOS bet, there's like 8,000 DAUs, which is kind of interesting because like the definition of a DAU there is someone that's actually paying to use it. You have to pay to even create an account on EOS. And so we're starting to see that. I think that's going to be real. I think, again, that's basically regulatory arbitrage. And I think for the most part, that is what crypto is about, right? Like crypto is about regulatory arbitrage, and it's about a permissionless system that anyone can build on. The final one, besides sort of like seizure-resistant store of value and gaming, is I think like digital, I guess what I would refer to as like digital assets. But I would temper that with like the only one that I can think of right now is basically names on Handshake or names on ENS. And so you have this idea that like, you know, the Handshake blockchain, which is going to be used to have a DNS alternative, you know, we'll be able to store what I think of almost as like digital real estate. And we know from the, you know, centralized domain world that these are valuable, that domain names have value. And I think when you back them with cryptography, they become even more valuable. So those are kind of like the areas that we seriously look at and we think of as like, you know, investable right now, not as like speculative, maybe in the future they'll be worth something.
Interesting. I actually, in a few minutes, I want to come back to China and just how the expression and the urgency of the store of value use case, I feel like is quite a bit different in different parts of the world, and that's something I want to talk about. But Lawson, I know that obviously you are thinking at least about the possibilities of use cases as it relates to some of these gambling ideas, if for no other reason than they're super interesting to you. So I guess I would love to hear your answer to this question just sort of generally, but then I also would love for you to tell us a little bit about the project that you pushed live last week.
Yeah, I guess we started from the question of like, is infrastructure dictated by use case first, and then there's a need for infrastructure? And yeah, I mean, I agree with that. I actually haven't read the USV piece, but I was going to reference the Satoshi's Place example and the Lightning Network. One of the guys that was at TokenSoft isn't there anymore, actually, who built Satoshi's Place. And as Satoshi's Place was first going out there and gaining popularity, he was interacting like with Lightning Labs, like in a direct messenger, because like stuff was breaking. And so they were fixing stuff in real time, which was really kind of cool. But most definitely in that scenario, you have like a super niche group. Like there's no service provider that could even run a Lightning node. You had to like do all that yourself. And so when you think about like, what is the use case like for users who aren't just attracted by permissionless money and like a new world without governments and that whole deal. I think games is the most natural use case as well. I'll kind of just piggyback off that. There's a lot of different use cases, but games I think is kind of interesting to me. CryptoKitties was to me a little bit more of a novelty and was exciting at a time. But I think the real games will be these other types of organizations. I think, you know, FOMO 3D for me was like a really kind of powerful, kind of cool tool that immediately in my head said like, okay, like how do state-based lotteries compete when the alternative is this other version that has, like, you know how much capital is there, you know what the pot that could be won is, and everything's kind of understood within the system. So the project I worked on released a week or so ago. It's called Babafa. We just released a white paper with Patrick Kershaw, and it was actually Patrick's brainchild. But what Babafa is essentially a mashup of a whole lot of different ideas that we had seen kind of used individually in various types of cryptocurrency type of projects. And it's as we call it, a decentralized autonomous gaming co-op. Think of it as the casino, except all the funds return back to the users. And so in this world, users are the players, users are the workers, and users also are the shareholders. That's kind of exciting stuff. In the white paper, it's definitely a thought experiment of what is possible. But when you really think about that, I think there's a really great use case for things beyond just our regulatory arbitrage, as Eric mentioned. I think there's very interesting structures around that could be kind of interesting.
Yeah, I think certainly it's interesting because what has struck me about this kind of concept, I should say, is it's a concept that you guys are exploring that you wanted to invite people to explore with you. But it's almost where this idea of regulatory arbitrage, or at least sort of being able to do things that wouldn't necessarily be sanctioned, meets these interesting the experiments that people have been excited to do around decentralized organizations, a different way to organize networks towards a purpose and stuff. It feels like you're kind of, with this project being a little intentional about the how you use some of these game-like structures to see how organizations might be able to sort of be aligned in a different way, which is a more like one of those far out use cases, I guess. Eric, sorry, what were you gonna say?
So, yeah, I don't see how this isn't textbook regulatory arbitrage. What you guys have done is created this thing that regulators would absolutely not be stoked about. In a way that makes it difficult for them to deal with.
Agree, but it also has an interesting use case. When the alternative is a casino that extracts value, I believe you can create entities that can replicate a lot of that user experience and provide value. I think it's a fundamental, I think the technology in front of us has given us opportunities to do things fundamentally different. I believe there could be types of organizations where the value extractive versions, where you have shareholders at the top that are basically allocating capital to work and services, and then based off of some sort of margin, taking back toward them. I believe in an open source world where all the code is sitting there and the alternative provides back to the user, I think in that scenario, for that type of use case, you could have organizations that outcompete a value extractive organization like a normal casino. Yes, regulatory arbitrage exists there, but you also have a different structure with different incentives and as a result, potentially different impact.
Yeah, I would say that okay, it's enabled by regulatory arbitrage for sure, right? That's the bedrock on which this is built. And then it extracts a lot less value. I read you guys, I thought this was really cool, by the way, I'm super into it. But it's what, 98% goes back to the users, but there's a 2% rake, is that correct?
There's a 1.5% that goes into different jackpots, and then at some point is returned back. There's a foundation that decays over time, but that's just a recognition that decentralized web doesn't exist. You need to run a server and a user interface to start. But the idea is for it to all be returned in jackpots or otherwise.
Right. Okay. Yeah. I think it makes sense to me that that's a better alternative to something that has a bigger rake, right? And it'll just be increasingly competitive until the rake becomes really tiny. I guess I would kind of challenge that that foundation can never go away though. I think so far what we've seen is no one's successfully done that, where they're hey, we have this thing that's a stopgap, and then once we can be fully decentralized, we will. But it's it always seems it ends up being pretty hard to give up.
100%. We put a 10-year time frame in the light paper. I don't know. When are we going to have all the infrastructure to truly have decentralized organizations and entities that have both a user interface and servers and all sorts of stuff, and storage of data and movement of information around? Right. That's a different ball game. Doesn't exist right now, and so we basically said it doesn't exist, so you need a foundation.
Yeah, no, I'm with you 100%. Like I think that is the reality at the moment. What are you guys going to do if like the foundation gets a cease and desist?
So we're not building it. We released it as a thought experiment. If somebody wants to build it, feel free. Like I'll advise on it, but like we're not building it ourselves. It was more of like we think this is possible, and so we want to talk about it.
Got it.
Yeah.
Yeah, I mean, so the FOMO 3D guys did build it, right? And like to this day, I think no one really knows who they are, which is pretty amazing. Go ahead.
Yeah, I mean, we thought long and hard. Like, do we want our names associated with this? Like, do we want to build this? Do we want to be public about it? And finally, we just said, like, screw it. We're just going to release it and let people think about it and talk about it. Maybe it gets built someday by us in the private or somebody else in the private, but we have no plans to build it right now. But yeah, I mean, because obviously there is regulatory arbitrage. Like, it's a game that like people allow people to gamble. And the difference is we think ours is more competitive. That's the difference.
I think you're 100% right. And I think what you'll see is like, there will be more. I mean, so FOMO 3D is this really interesting example because FOMO 3D from a game perspective is insanely simple.
I know.
And so it's not that hard for them to like stand up the infrastructure in a relatively anonymous way and have it out there. But I guess what's really fascinating to me is like, if you look at Minecraft, right? Like Minecraft, when it first got started, was literally this dude Notch just like released this software, and it became insanely popular. And he monetized it, of course, by selling it to Microsoft. But I could easily imagine like an anonymous version of Notch releases a similarly simple game, and the game has a client, and then it has a token at the same time, and the token is used for the in-game economy, and the whole thing just remains anonymous. And you can imagine that could become incredibly popular, without ever sort of having a real identity or raising from VCs or anything like that.
Yep. No, I mean we've contemplated some different ideas. There are tokens within Babafa, and those tokens could be used to incentivize the original development team outside of a foundation. I was talking with YT Artists, which is Neon District, and she builds a lot of games. And she was like, "Hey, are you guys going to build this? I probably would know some people, or like I want to find ways to support them." I think these are the types of organizations that we will start to see, especially as like entities are different, or work is different. Like how things are organized, both like with people and like organizations, but also like in technology. I think it's it's a structure that could be used for to incentivize an anonymous team, and they probably could profit handsomely without ever being really known.
So I mean, I think Grin provides like a great example for how that could look, and I think we'll see a lot more Grin style teams.
Yeah.
It's interesting to me that there haven't been more. I feel like we've been living with like the in the shadow of Satoshi's ghost forever, with sort of like the benefits of a leaderless organization. It feels like only natural that people are going to start doing it. Also, you have people who are willing to do things for different incentives that don't involve VC necessarily, right? So it's all of a sudden you have this whole new types of entrants who are trying to create new things. But Eric, I want to be conscious of all of your times, and there's one thing that I want to make sure we talk about at least a little bit or touch on is we've been talking about some of the most far out or potential use cases in the long run. But one of the things that you mentioned, Eric, was the difference in the importance of holding, right, in China, where there's these huge restrictions on how you can hold and move cash and things like that. So one of the things that I've been kind of keeping an eye on, my background is all in international political history type stuff, and I've been wondering to what extent, like how the larger kind of global macroeconomic and like trade war narrative is going to or not come into crypto. And I've noticed a couple of times, obviously you have been, spend a foundational part of your life in China and just in not outside the US. It's core to the extent you have a thesis, I feel like it's about where you need to be and how you need to learn and from whom you need to learn more than specific things that you know. So anyways, I've noticed recently you getting kind of frustrated with the way that some of the narratives are emerging about China as an entity. And so I wanted to touch on the international part of this conversation a little bit.
Yeah, I mean, well, so I tweeted about this yesterday, but one of our portfolio founders, who will go unnamed, had his bank account in China forcibly shut down, and they
I
told
love
him
this
that
story, by the way.
yeah, this is amazing. This happened in
Yeah.
one of our WeChat groups. So he goes, "Is anyone free to come help me move some stuff?" And we're like, "What's going on?" And he goes, "I got to withdraw like, a large amount of cash from my bank account." And so he's in the bank room, and he doesn't realize that like it turns out cash is really heavy, and so he's got like 100 kilograms of renminbi to move out of his bank. And so like he ends up calling up one of the big OTC desks, and he takes out the cash, and then he transports it like half a mile to his house. The OTC broker meets him, and he's like, I think by now he's converted it into Bitcoin. But it was this incredible saga that just shows like, non-permissionless money really sucks. And when your bank can literally just tell you get out of here at a whim, and literally give you no option other than to like, dubiously safely move a ton of cash around, it really sucks. And so I think like in China, the use case for crypto is just so much more reflexive and obvious, and like it doesn't require a lot of think pieces or contemplation. It's just like, well, when the government has 100% control over your money and they exercise that fairly often, you want some alternative.
100% agree. I think you said it earlier that like the primary and first use case is like permissionless, like censorship money, which is generally a second and third world problem, or problems where your country has more controls over your financial like wherewithal. The AirTM guys are kind of my favorite example. They basically help users in second and third world countries feel like they're holding dollars, either by actually holding them in like US banks or like access crypto. They have a whole lot of like similar-ish stories around kind of what you've described, Eric. A lot of users in Venezuela. The Venezuelan government is like actively trying to block their IP. Like when you think about like censorship-resistant like money, you also have like censorship-resistant like organizations, and you have these other type of organizations that are service providers that have a lot of the same problems. And so like what's really exciting to me, like a narrative behind cryptocurrencies, is like moving back towards like internet infrastructure that we had previously, where it was more peer-to-peer and less constraint points, like up to the cloud and then back down. That's why I'm really excited to see like what the groups like AirTM and like groups that are trying to address those type of problems, because they have normal internet problems that exist outside of this permissionless like money.
Yeah. I mean, so I love those guys. I met some of the other Venezuelan crypto folks at the first Zcash conference at ZCon, and like talking to them was super interesting. And I guess like there's this interesting problem where like the people that need crypto most, it's really difficult for them to get it with fiat, and it's kind of inherently dangerous. And fiat is like this closed system, so it's pretty hard to get out of it. And I think something that I really would love to fund. So if anyone out there is listening, like if you want to get funding from Primitive, is go make an OTC product for some country that you think is going to undergo a currency crisis within the next 2 years, but not within the next 1 year. Because like the ones that are going to happen, it's going to happen really soon. Those guys are going to shut you down now. And the trick is like get everyone into crypto just before they need it. And I think like I've got a list of candidate countries if anyone DMs me. But
well, if they're Spanish speaking, you should get back to the AirTM guys. Those guys have a lot of ambitions. I think outside of that, like, I mean, I think a lot of stuff in the Middle East in Africa are going to have a lot of problems coming up. Yeah, I mean, these are cultural problems that like have like barriers of entry that exist beyond technology. Like, are you marketing it in their language? And so you definitely will see a need for not necessarily copycats, but people who are solving the same problem in a different location. Because like being able to replicate yourself is not as easy when you have a communication problem outside of a technology problem.
Yeah, totally, dude. And like I think of these businesses as like they're not maybe insanely profitable the way some crypto businesses are, and they're also not easy and they don't really scale, but like enabling them is hugely value additive for crypto as a whole. So like if your fund holds a lot of Bitcoin, like you should be funding stuff like this just because it has such huge knock-on effects for the big cryptocurrencies.
Yeah, it's interesting that like it's not necessarily super relevant to most people, but something that I was watching is Binance launching its first fiat to non-USD on-ramp in Uganda. I think it was 2 weeks ago, maybe. I spent a lot of time in Uganda. So it was interesting to me that that was first place that they went. I don't think it had anything more to do with than sort of a receptive government who was interested in hosting them. But I think it's interesting that all of these things are percolating kind of at the same time. Well, so we're coming up on the end. And so a thing that I love to do to kind of round out these shows is, people know, or those of you who know me know that I'm super interested in narratives. I think especially in such an early industry, the way that we kind of tell stories about this industry shapes also what we do. And so I'm interested in hearing from each of you guys what you think we're going to be talking about in, call it a month or 2 months, kind of closing out this year. What do you think that people are going to be talking about or should be talking about, maybe that we're not now? Taylor, I'm going to put you on the spot first.
That's such a good question. I don't know. I think that, so these sort of the same narratives that we're seeing right now, but they're going to be just tweaked. So like we saw sort of like tokens turn into ICOs, turn into, pre-sale with accredited investors only, turn into security tokens, turn it, what I mean? That same sort of like evolution over time. So I think that tokens are going to remain at the forefront of the conversation, but with some new little twist. I'm hoping that we'll see more talk about like building really useful things and building things that are decentralized and are for the people and that are going to make everyone's lives easier. And, with a big push on user experience. I don't know if people are actually going to talk about that, but that's what I'd like the narrative to be, because I think that is, right now we're sitting here. I think it's the perfect opportunity to really put our heads down and build, whether it's infrastructure, whether it's apps, whether it's better user experiences, everything in between. Now is the time to do it, because we learned sort of in 2017, it's quite hard to build when everything's sort of on fire and new people are entering the space super, super fast, and, everything's sort of up in the air. So, yeah, and beyond that, I think, so this sort of ties back to the conversation we had a little bit earlier about, what sort of these different categories of crypto or categories of use and, regulatory arbitrage, et cetera, et cetera. I think that land grab sort of opportunities. So, we've seen it with the ENS. We're seeing it sort of with like Gods Unchained right now. We sort of saw with CryptoKitties. I don't know if you want to put CryptoKitties as this, as like a collectible or as a game. But I think that these sort of financial land grabs are going to become more and more prominent. And I'm not, because I actually would rather see more sort of gambling or gaming or real use cases that go beyond pure speculation. So we'll see how that plays out throughout the rest of the year, though.
I love it. As a side note, has anyone actually like reported back about, like, is Gods Unchained a playable game? Like, is it fun? I mean, it's
all you can do is buy packs.
Yeah. So it's
so that's
super interesting.
Why I think, Eric, did you classify these as digital assets?
Yeah, but I don't think they have value because they're not fun. The problem is like, the reason that the like items in World of Warcraft were valuable is because people actually like playing World of Warcraft. And so like the game has to be fun before you can have valuable assets, I think.
Yeah, that was my question, because when I was like 9 years old, I was obsessed with baseball cards, and someone was like, yo, I got something better for you. Like, you're going to love this game. It's called Magic the Gathering. And I was like, no, that sounds stupid. I'm never going to be interested in that. And like 3 months later, I was like starting lawn mowing businesses so I could buy more cards, right? And that game, obviously, like, it invented a genre. It's the 25th anniversary of the game this year. But the reason it sticks around isn't like, there's a direct relationship between the fact that it is a beloved game with a quarter century of player base and a million different formats that people love, and the things are collectible. But like, I don't know. It's hard to just reverse engineer from scarcity and value. But I'm totally open to Gods Unchained being awesome. I would love it for it to be. I just haven't heard anyone actually talk about the game itself. All right, sorry.
Sorry, it's because it doesn't exist yet. I think that they're sort of doing, it's a long story, but yeah, right now you can just get these cards, and I'll be completely honest, I don't understand that industry. I've never played Magic the Gathering. I made a fool of myself on our all hands call by asking my team if they played trading card games in real life, and literally every single one did. But I do think that's why I'm separating gaming from land grab, and in the same way that the ENS, I love the ENS. I love the potential of the ENS, but like, let's be real for a second. The reason people bought ENS names was not to use the ENS names. It was because they hoped that the ENS names would be more valuable in the future. So again, it's all speculative. It's all those types of things. We're just finding different formats of it. And, I'm hoping that we'll see an evolution from land grab to actual, we want to purchase these things or hold these things, or these things will increase in value because the game is freaking super fun, or this whatever next generation gambling application thing is amazing. And those are the things that I'd like to talk about, and I'd like to see built over the end of the year in 2019.
Awesome, love it. All right, Lawson, what will we, or what should we be talking about closing out this year?
I think you said like a month or two. I don't know, for a month or two. I mean, like, I think we're going to have a whole lot of announcements for partnerships and stuff that's going to launch at some point in the future, because people like making those announcements. But like, if I think like trends that like I'm following and that I'm excited about and like I'm writing about, that kind of more bases around like, how do we put these assets to work? I think a lot of groups in the space, both investors and like providers that provide like the ability to, like, custody providers or non-custodial providers like MyCrypto. I think we've been looking at a lot of these assets as things that can hold, and maybe at some point, like, it'll be worth more money at some point. I think the narrative that I'm excited about is like, how do we put these to work and like, interact with my protocol or interact with whatever layer I have, to both like provide a return, but also to provide a value to the network. And so that's what I've been kind of like calling my working fund kind of thought process. I'm writing some stuff on that right now. Jake at I think that's the crypto fund. What is his name? It's his fund. He's writing about that right now. He calls it mining 2.0 or something like that. That's the kind of exciting things that I'm kind of reading about and like I'm following. But like, that's a longer narrative than a month or two.
Cool. All right, that's cool. So maybe we'll be talking about like boring versions of STOs and people trying to capture the ICO energy. But what we should be talking about is on-chain cash flows for new types of organizations.
That's the stuff that excites me. Yeah, definitely.
Yeah. Awesome. Eric, what do you think? What are we gonna what are, and this is actually, I guess what I'm actually asking is like, what are your predictions for end of year lists of like important stuff that we should be thinking about?
Yeah. I mean, so I'll stick to the 2-month time frame. In 2 months, I believe the Handshake mainnet will be launched. And with that, you'll be able to have a name that will allow you to receive crypto on basically any chain. And so someone can just send you Bitcoin or ETH or, Tron to Nathaniel, and you'll just get it, and that'll be sweet. I think people will also start using Handshake to have uncensorable websites. And so that in general is like a theme I'm super excited about, is that like stuff like, Sci-Hub will just be able to have a completely uncensorable domain name that no one can take away from them. And we'll see a lot of interesting content that people want that maybe governments are not so stoked about. So I think that's going to be big, and I think that's going to happen within 2 months. The other thing, I guess the other two things is I think Lawson is totally right that STO stuff is super uninteresting, and that it's mostly these really crappy issuers that couldn't issue on a normal stock exchange, and so they're trying to trick crypto users into wanting their crappy securities. I don't think that's going to be interesting. However, the on-chain cash flow stuff is fascinating, and those are also security tokens. Although, I kind of hate that name because it's like we're bucketing these things by what regulators have.
Yeah, it's not the
It's like they're like value accretive tokens or whatever you want to call them. But someone's going to build Babafa. Someone's going to build a way better version of FOMO 3D. These are all going to get built. They're going to have value accretive tokens that people trade, and it's going to be super exciting. I think that's there's nothing kind of preventing that from happening now. So within 2 months, we're going to see at least one interesting one. And then the last one is I think there's going to be a big uptick in actual privacy coin usage. So I don't think Grin is going to go live within 2 months, but something kind of close to that. And then Zcash has sampling live now, and so we'll see a lot more Z transactions. And governments are going to start having to think about how they feel about a world in which most transaction volume is completely opaque to them.
I have one more prediction. We're going to have a whole lot of 10-year white paper, the Bitcoin white paper 10-year Halloween.
Oh, Jesus, the
really bad articles and price point. Okay, like they're going to hate on something.
We're launching something fun. We're launching something fun on the anniversary of that.
I'm throwing a white paper Halloween party. If you're in San Francisco, let me know.
That's right.
Amazing. Awesome, guys. Well, listen, thank you all so much for being here. I'll make sure that your handles and everything are blasted out on the show notes, but awesome to have you guys. Thanks for the conversation.
Yeah, thanks for the invite.
This is great.
This was super fun. Talk to you guys later.
Later, guys.
Bye.
Bye, guys.